Hello, investor and trader. Welcome back to another live episode of Day Trading Recap. So yesterday I did not day trade, but I did made a trade on option. I always like to share with you guys after today's recap. So I've been watching DATS for the past 2 days. Yesterday I made a pretty big move, but I didn't trade. So kind of missed out a lot of moves, but it's okay, Since I don't normally trade, I would say penny stock, because this was an $8 stock, right, or lower. Suddenly have a big move, a short squeeze. But I don't normally trade a $15 stock. If you watch my video, it's all in the hundreds and a couple $100 stock, because that's my comfortable stock. DATS is kind of out of my comfort zone. That's why today I trade small size. But nonetheless, the way I make my judgment on a trade is based on candlestick formation. Notice I don't have volume up because I don't really need it. I don't trade volumes. Well, sorry, I don't trade with volume bars. It's nice to have it, but I don't need it. Some trader wants it, some trader don't need it. My case, I don't need it. And I'm gonna show you guys how I nail all these trades without using volume, just using candlestick formation. The whole idea is candlestick formation because that's how I learn. I'm gonna share you guys how I trade. Just give you guys a different perspective. So pre-market, DATS. I noticed there's something right here. So there's like a channel right here, right? Kind of obvious around the 1630, and right here too, the support somewhere right here. It's not gonna be whole numbers, but somewhere right here. So pre-market, I've been bouncing like this, up and down, and then I get out of the channel, bring it back up. Now it's out the channel, and notice the market about to be open. This is California time, Pacific Standard Time. So normally the first 5 minute, remember this is 5 minute candlesticks. I don't like to trade in the first 5 minute for me, okay, for my case, because I want to see what kind of candle it formed. So let me pass forward a little bit. Right here, the market open, so it tanked real quick down to the support here, and then it bounced real quick. This stock moves very fast. And then at one point it hit like 1720 and 17, see, like right there, I don't even see it now, but real quick. Yeah, it happened so fast, and then I just tank. So this is why I don't like to trade in the first candle, right? I don't know what's going to happen. Imagine you buy somewhere right here in the 17, thinking that it could go 18 because that was the pre-market, that was the previous high, like 2 3 weeks ago. I thought the same thing as everybody else. I thought this, okay, it's gonna hit 18, maybe 5 to 20 bucks or higher. Unfortunately, that didn't happen. Massive red candle. This candle, I don't know how to describe this candle. It's not a doji. It's just a big body and big wicks, right? Big wick here and a big wick here. No. I'm going to wait for the next candle, which is this candle. Notice this candle right now is a lower high and a lower low. Not my type. I will wait for the next candle. Nope, still not interested. Still too crazy for me. And what I'm waiting for is this stochastic right here to get near the 30 and slowly sloping up, kind of like that. Or it does something like convergent divergent on the RSI, and I'll share you guys that in a little bit. So at the moment, some might argue, why don't you just enter right here? You can if you want, but I just want to play it safe. So I don't want to enter it yet because notice the pre-market right here. A lot of action going on around 1580, 1570, where the stock price is right now. So I'm gonna wait a little bit. At this point, I noticed it break below this channel already. So I want to see if buyer is stepping in like this wick right here. Notice the stock is slowly pushing up, which is good. And eventually it does a pin bar right there. So now it's a whole new 5 minute candle right there. So I noticed, okay, now buyer is stepping in around right here. So I decided to enter 300 shares right there. So like I said, it's very small size. I want to minimize my risk, that's why I'm just testing out my ability to read candlestick formation. Resistance are right here. It needs to break above that. Ultimately, somewhere right here. So let me draw another one. I think the stock move, it was right here originally, 1630, not this one right here. So let me clear all this up. So I sold 100 shares near the 30 cents. So I have 200 shares left. Gonna give some time, but it moves so fast. There, I don't know if you can catch that move or not, but at one point it hit 1650, like for a split second, and then it just pulled back real quick. So I'm like, what just happened? It happened so fast. Yeah, that's what happened when you trade these high flying stock or high volatility stock. They are fun to trade, but man, you need hotkeys for this. And you guys know me, right? I don't use hotkeys at all. I manually type out my trades. So at this point, I noticed, oh, great, I already missed that, pop. So now it's pulling back. It looks like it put a red candle. So now I need to sell my shares, but I don't want to sell below 16. I want to sell slightly above 16. So I'm waiting for that little bounce. Notice all the moving averages are right here. So I'm pretty comfortable that I have an idea that okay, it's gonna bounce back above 16 a little bit, and then continue to the downside. There's the pullback. All right, exit. Okay, so the first trade right there, like $100, I think. No, $88. $88, not bad. So now, just gonna wait and see what happens. So gonna wait and wait and wait, and then that happened. This right here, it got halted. So it says zero, raise zero. It got halted. So I was like, what the heck? It halted already? I mean, it's only dropped $1 or something, right? But it got halted. And then my friend alerted me another stock, so I look at it as a JSPR. He alerted me kind of late for this stock because notice it's from $8 to 16, right? Double its size rate, and double its gain, like 137% return. So at this point, I'm like, nah, I'm not buying it. Look, RSI is too damn high. Stochastic is way too high. This is like chasing. Notice how far away from the moving average, especially down here, and this one. So I'm like, nah, just gonna watch, AFK and watch. Meanwhile, waiting for DATS to come back because it got halted. All right, so now DATS is back. So am I gonna jump right in on this candle? Absolutely not. After the halt, then re-halt, I guess. And I don't know when the stock is back. I like to see the whole candle finish, just to see what kind of candle it form. Again, like I said, I trade like a chicken. I don't like to jump in before or be aggressive. But hey, I like my chicken style. Okay, so I just let it finish. Okay, now it's finished. Now it's a brand new candle. It's 35. This candle it's a doji, but a long-legged doji. It's a pretty crazy doji because the wick is so big. I don't like candles like that. So I decide, okay, let's see if 1280 would hold. Because there are some buyers stepping in with that push the stock to go up like that. Now it's creating a lower low and a lower high. Not ideal, but 1812 still look pretty catchy for now. For now. But no, I decided not to enter. So right here, it looks very attractive, right? As in a potential trade. Resistance right here, 1880. It looks like kind of reverse of this a little bit, right? RSI is slowly creeping up. Stochastic slow, not crossing yet, but it's getting there. So it looked very attractive, right? However, what I was looking for. So let me draw right here. I want to see the candle goes above it. Unfortunately, that didn't happen. As you can see how there's a tiny wick right there, and then it just tank. So I need to see a higher high. That's that didn't happen. So it was a bull trap, and then that happened. So right here is getting a little bit attractive for me. Okay, at that time. So that was just going a different time frame to see how low can it go and stuff. Different time frame. So right here, so this was the first bull trap already. Could this be the second bull trap? So I note here, I noticed something. RSI is slowly increasing. Stochastic is kind of getting sloping over a little bit, kind of like plateau a little bit. Meanwhile, this green moving average right here, which is the 6 daily EMA, sorry, intraday EMA, is acting as a resistance, right? So now I'm gonna have a hard time breaking above this level right here. So I decide, you know what, I'm gonna wait. I want to see it goes above 1230 or something like that. But nope, that didn't happen. Peekaboo, right? Let's see how it peak a little bit. False breakout because the candle, I was waiting for it to finish, but that didn't happen. Continue to the downside. But right here is getting more and more attractive. The reason is because, sorry, now I'm just going to the daily time frame to see the key level support. How low can the stock go, you know? But right here is getting attractive already for me. The reason is because notice the stock is falling, starting right here, I think. Kind of draw like that. And notice the RSI right here is slowly increasing. This is known as the RSI divergent convergence, around the $0.50 kind of. So there's the high probability that it will bounce. So this candle got my attention. It tried to peek above it, but it fell. So a little slightly pullback, which is okay. Notice the RSI is slowly increasing again. So I have my limit order ready at 1160. At this time, I was kind of scared because there's like two bull traps already, right? One here and one here. This could be a third bull trap. Who knows? But I was a little bit scared, although I trade small size. So I got in, little pullback, and then a little pop. I got out. I got scared. But at least I know, okay, it's looking pretty good. So I decided to enter with again, but small size, 50 shares. I just didn't want to give my profit back, although it was a tiny ass profit. So where am I going to sell? Well, it's very obvious. The next resistance is right here. Since now is above the green moving average already, the next one is right here, around the 30 cents because this previous high. And not just that, also this moving average right here. See how it's slowly creeping down as time goes on, and this candle body is fully above this green moving average now. So the next is obviously either to this resistance or this resistance, somewhere around that price range. There you go. So I sold it right, barely tap it around the 25, 25 cents around right there because it's getting near it. So that was my trade right there. Pretty much that's it. Made 100, 1, 2, 3. And notice the stochastic right here is getting high to the point where it's getting overextended. First red candle shows up ever since the little reversal right here. Notice this two candle is about the same size. Notice the stochastic is at its peak, like right here, right? That means there's a high probability that it continues to the downside. And it did. After that, I'm done trading because this stock right here for Fidelity, you cannot short. You can only go long. So you can see the rest of the day it just continued to the downside. Yep, that's it. That's all I did for today. Not a big gain, but a lot of reading candlestick formation. I think that's more important than the profit itself. Because over time you get better at it and stuff like that. You can increase your share size and so on and so on. All right, so that was the day trading right there. On top of that, one idea that got me a little worried was because you see how it falls like that, but the bounce is so little. So I know, okay, there gonna be a lot of bullet traps because if you look at for the past 2 days, right, or 5 days, this stock had a massive run, right, from $8, yeah, from $8 all the way to 17. That's like double your money in like 2, 3, 4 days, you know. Of course, it has to pull back, but then again, it has a probability that it might hit, the 18, but that didn't happen. And if you use I don't really show this much on this chart, but I do use this on my other chart, my other screen. Sometimes, not always, but sometimes. It's the Fibonacci right here. At that time where I started trading here, notice it just hit 23 only and then it went back down. And also it's like the RSI here is kind of high. So that's one way of looking at Fibonacci. So these right here act as a resistance as the stock, rebound. Now you look at a Visa, because I was watching Visa too. Now let me change this to Visa. But I didn't trade Visa though. My friend traded Visa. But I was watching Visa with him when he made this trade. So Visa falling, right, just like DATS. But notice something right here. See, the stock is going down right here. Notice the RSI is increasing and then pop, right? Divergent convergence. Pretty cool, huh? So let me draw the thing, not the thing. So it's like right here, stock going down, RSI increasing, then boom, pop. Pretty cool. And notice the Fibonacci. So here's the bottom, near the bottom, right? And then so let's say we're gonna catch the bottom like right here, maybe like on this candle. So it's going up. First resistance right here, right? This line right here. The next one is right here. The next one is right here, the 50%, and the next one ultimately 61%, almost 61, but it's not exact. So that was pretty cool. All right, so the option trading I did was CCL. So let me go to the image that I took a screenshot. So CCL, I have a cover call for CCL at $26 strike price, which is due November 12th, which is like 1 month from now. And I collected 1950. So let's go to CCL. 1950 as in the premium. Go to the daily because, All right, so now I'm thinking, you know what? I want to do another cover, not cover call, a sell put option. Sell cash security put around 2250, which is right here. I'm thinking about it. I haven't made that move yet because so far I only have 3,000 shares. For my account side, 3,000 shares is not a big position. It's a decent size, but not huge. So I'm thinking I want to do another cash secure put right here to collect some more premium. Meanwhile, building up my position for CCL. So I'm thinking that a month from now it could hit 26. I don't know if it does or not. If it hits, great. If it doesn't, it's okay too. I'm just gonna repeat, and repeat, just like I did right here on my spreadsheet that I just created it. So CCL, I first bought the stock for 25.62, like a week ago, or 2 weeks ago. I don't remember when, but it was several weeks ago. So I did a cover call at 26. Obviously, it didn't hit 26, right? So I managed to collect 550 bucks. That's the first premium that I collected. So now this is the second premium. So now I take this price divided by 3,000 shares, which is 18 cents. Subtract this right here equal this right here. So right now my cost base is 25.44. But I did another cover call just recently, yesterday. So this cover call also the strike price 26 due November 12th. Collected 64 cents per share. Since I have 3,000 shares, subtract $20 stupid fee, turned out to be 1930 premium. So total collected almost 24.80. So I take this price, 64 cents, subtract this right here, give me a cost base right now at 24.80 after all the premium is collected. And again, my strike price is at 26. So if it hits 26, then the overall return is around 3,000 something like that. I think like 3,700 ish, whatever it is. But we will see. I don't know. I only have 3,000 shares though. I want to buy a little bit more to build my position. Just test out, doing the wheel strategy they call it. And we sell put. Once you enter a put, you sell cover call. Repeat the process over and over and over. That's what I'm doing right. That's what I'm testing out. I just barely learned the strategy like a month ago. It's kind of embarrassing, but that's the truth. I just barely learned it, and I've been training for 7 years. Yeah. Anyway, so that's what I did for the past couple of days. Not much, not much for in terms of day trading. I would not say this is real day trading. It's more like testing my ability to read candlesticks more than day trading because $100 a day from my account side, that's nothing. I hardly see a dent in the profit loss thing. Okay, hope you guys are doing well in this market condition. Just be careful out there in terms of the coronavirus. All right, see you guys in the next video. Bye.